So when should you sell a stock? And I'm talking about, long-term investors that want to hold stocks because that's, really how you make money over the long run, is you got to hold them, through the good, through the bad. And then eventually, hopefully, you're going to have a few winners that are going to make up for more than the losses. I mean, that's what we try to do, right? When I'm trying to think about investing is I'm trying to single out amazing, amazing companies, get a few of them in the portfolio, maybe a dozen, maybe 20, whatever, and then hold them. But every now and then there are certain companies that they just fail to grow year after year. We're going to go through an example today where, there are a lot of red lights that are flashing on one of these companies that we're talking about. And this was an old school giant. I mean, this was a growth stock. This was a huge one. But it just had a lot of red flags. And now as I get older and you can kind of look at some of this stuff and, a lot of the companies that I hold, they don't have these characteristics, but I think it's important to go through this because there was an event that happened back in 2007. I remember I was on the trading desk when this happened, when the headlines hit. I should have known, I was a little younger investor back then, but I should have known that the game was starting to change for this player. And so that's what we're going to be looking at today is when does growth slow down enough that you need to sell a stock? Hey, I'm Luke Downey. Here's another edition of Lessons with Luke. Been investing for a long time. Want to make you a better investor. So make sure to like and subscribe to our YouTube channel so that we can keep doing this. So here's the deal. I'm all about stocks go up over the long term, right? That's what I preach. It is true. That is what works. But every now and then there comes a competitor to a company where you're better off just jumping to the competitor as opposed to, being a diehard fan and saying, you know what, I'm going to hold this other stock, till death do us part. Because the game fundamentally changed in this example that I'm going to be going over. And it took a couple of years for it to play out, but you can start to look at some of the fundamental characteristics, some of the growth rates that I'm going to show you to let you know that this stock was in trouble a long time ago. Okay. The writing was on the wall. So let me go ahead and share my screen. And what stock am I talking about? I'm going to be talking about when Apple released its iPhone. Anybody remember this? This was right around here. This is, June 29, 2007. Big headlines hit. The iPhone, right? Steve Jobs gets up there and he says, we are going to reinvent the cell phone. And up until that point, people had BlackBerries, they had Nokias, they didn't have all these cool functional phones, right? But here's the deal. Back then, Apple, it was a juggernaut, but it wasn't what it is today. And so you could have jumped on board and look at where this thing ended up going. It almost went up 3,800% from there. So again, this stock was already high. They announced an iPhone. And I remember that day, there was one stock in particular that fell really hard. And that was Research in Motion, which is also known as BlackBerry. So if you guys don't know anything about Research in Motion, years ago, this was the quintessential growth stock. I mean, we waited for the quarterly reports to come out because they would consistently smash guidance. I mean, it was insane. They came out with these cool BlackBerries. They had this texting functionality that was in-house. It was only theirs, very similar to like iMessage with iPhone. But BlackBerry was it was for business people, right? Nobody had hacked their software and all that type of stuff. So as you can see, since 1999, it looks like when Research in Motion started to trade, the stock went absolutely bonkers. I mean, this thing just kept going up, up and away. And it's hard to really see how much growth that is when you're looking at it in the rearview mirror. But this stock was a beast. I mean, it was the number one. You wanted growth, you went to BlackBerry. Canadian company, was awesome. But here is the day that the iPhone was actually announced. It's somewhere around here. The stock was actually down. And then there were a lot of whispers about, this could be really bad for Research in Motion. What if the iPhone actually takes off? All that type of stuff. It actually took a while for Apple's iPhone to catch up and to become the greatness that it is today. And I think, whenever they started, it was only for AT&T. So I didn't have an AT&T phone. I had a Verizon phone. So it wasn't like I was going to be able to get the iPhone. But What is really interesting is if you start to look at some of the revenue growth rates that started to happen for BlackBerry, aka Research in Motion, you can start to see where the pain started to happen years later. So I'm at macrotrends.net, and they allow you to look at, all the revenue. So you can look at it by year, by quarter, whatever. I just want to focus on the year. And so this is from 2006 all the way to, it looks like 2020. So you can see, remember in the early stages of Research in Motion, BlackBerry, the company was growing like a weed. I mean, this is, annual revenue was just crushing it, right? And, right whenever the iPhone was announced, that's somewhere around, looks like here, 2007. Okay. But the revenue growth started to slow. Okay. So in these couple of years here, whenever you got to 2009, 2010, iPhone was starting to catch up. People started to use the phones a little bit more. You started to use it, people were still using the desktop, but then they started moving to the iPhone. That's definitely the case now. People just use their iPhones, right? But you can see the slowing growth that really started to hit the stock, and the stock started to fall because the company just didn't have a lot of growth, and they really weren't investing in their OS operating system. Just was kind of like old school, right? And then you start to see that the revenue, in fact, started to dip right here around 2011. And now it's okay to have one dip, in a year, but whenever you start to see two dips, three dips in a year, like things are not going the right way. Okay. And so who was benefiting from all of this? Well, if I could move this, it was in fact Apple. So if you look at the same time frames, right, their revenue never ever dipped. And obviously they had other products that were, introduced, iPhones, iPads, all that type of stuff. But the main thing you look for in a growth stock, like if you don't have earnings, okay, we can forgive you for that. But if you don't have revenue growth on like a multi-year basis, that is almost like the cardinal sin. You don't want to be doing that. And so Research in Motion just really got into this quicksand of a pullback that just never ended, this downtrend. And so since the iPhone was released, the stock is down anywhere from like 80 to 85%. Whereas you look at an Apple, 80, 85% right here, it's up almost like 40 times, right? And so that's what's really important about, be slow to sell your stocks, okay? Because stocks are going to hit rough patches, all of them, right? Pandemics happen, whatever. But if there's a systemic issue, better competitors, better products, no need for your product or your service, right? Or less of a need, failing to keep up with the times and just invest in technology, that is not a good sign. And so I just started looking at this morning and I was like, wow, this is a great way to kind of showcase when you might want to sell a stock. And look, I'll go ahead, share my screen just one more time. And when did BlackBerry really start to slow down? It was right about 2010, 2011. But you didn't have much time to actually get out before it went to effectively $10, right? So, I mean, it really went from, looks like $60, $70 in a straight line down to like 30. So that's the thing, is whenever growth starts to slow, there's a new player in town, maybe a better player in town, better technology. Do you think the big investors are going to hang around? Probably not. This is one of those quintessential cases that I remember vividly when the iPhone was announced. BlackBerry literally was the king. I mean, it was on the throne, and to watch it literally just wither away, it's kind of sad to look at it now, because I just remember that stock used to be a beast. And, Apple just came in, cleaned its lunch. And so that is the only time I would be really, really considering selling a stock, because I thought it was effectively going to zero, is if you see multi years of revenue slow down due to heavy competition. So that's your lesson for this week. I'll see you next time.